The EV car industry has been on fire ever since it got launched. Tesla is leading the race with NIO right behind. But which stock do you think is the better buy right now? If you want to know the answer, make sure to watch this video until the end. Hello future billionaires, welcome to Stock Investing 101, the channel where you get stock inspiration, motivation and knowledge to become the next future billionaire. In today's video, we bring you NIO and Tesla, what's the better buy? Without any further ado, let's dive in. NIO is a Chinese automobile manufacturer with its headquarters in Shanghai. They are specialized in designing and developing electronic vehicles. They have a few divisions under them: NIO Life, NIO Service and NIO Power. It was founded in November 2014. Their much-awaited NIO Day was conducted on January 9, 2021 in Chengdu, China. NIO unveiled its new car, ET7, on the 9th of January as rival Tesla started selling its China-made Model Y sport utility vehicle in the Chinese market. Some other key batteries and autonomous driving technologies were launched as well. NIO is expanding its product lineup to attract more customers. Sedans and SUVs make up around 46% of overall sales in China's passenger car market. ET7's new battery technology will give it a driving range of over 1,000 kilometers or 621 miles between charges, which is farther than expectations for 370 to 500 miles. Tesla was founded in 2003, and the company develops, designs, manufactures, and markets high-performance, technologically advanced electric cars and solar energy generation and energy storage products. Tesla released its first electric car, Roadster, in 2008. They sell more than 5 fully electric cars, and these are among the world's top-selling electric cars. These cars are fully electric and fuel-efficient. Tesla is starting deliveries of its locally made version of its Model Y compact SUV in China. This might be a blow to NIO as they specialized in SUVs. There were signs of a slowdown for NIO in its January 2021 delivery figures. NIO saw delivery growth in January slow to 3% compared to December. While these trends may not entirely be tied to Tesla's entry into the crossover market, Tesla is expected to put pressure on them for sure. Tesla has been gaining ground in China. It sold over 23,000 locally made Model 3 vehicles in China in December. Tesla's stronger global brand image and software features could make its vehicles way more attractive to Chinese customers. Tesla also has the scale to take on these companies in the SUV market. Its Shanghai plant, which began operations in late 2019, is likely to produce as much as 500,000 vehicles this year. In comparison, NIO is looking to increase production capacity to about 150,000 units. However, NIO too has some advantages. Charging infrastructure remains limited in China. Hence, NIO is betting big on modular batteries for its EVs that can be swapped out in a matter of minutes, helping to reduce range anxiety while providing batteries as a service under a subscription program. On February 5th, shares of NIO rose above a 57.3 cup-shaped buy point first cleared on January 8th. NIO stock peaked at 66.99 on January 11th and has struggled since, trading above and below the entry. The relative strength line for NIO stock rose sharply for most of 2020. The RS line has pulled back from January 2021 highs. NIO stock went public on the 6th of September in 2018. It hit a low of 1.19 in late 2019 on sales and cash woes. The company staged a strong rebound in 2020 along with China EV sales. On key earnings and other fundamental metrics, NIO is slow as it's a young and fast-growing company that is still looking to turn a profit. NIO stock earns an EPS rating of 53 out of 99 and an SMR rating of D on a scale of A+ to a worst E. The EPS rating compares a company's earnings growth versus other companies. The SMR rating measures sales growth, profit margins, and return on equity. NIO currently trails behind Tesla in terms of its EPS rating. The share price of Tesla has soared 1,200% since 2017. The market is pricing in Tesla to be way beyond a leading automotive maker. The enterprise value of Tesla at $826 billion is currently more than 10 times its March 2020 trough. At the same time, the enterprise value of NIO at $85 billion currently is higher than what Tesla was valued at in the March 2020 trough. Tesla has the advantage of profiting from the sale of EV regulatory credits, which NIO does not enjoy. Besides making super electric vehicles, Tesla's 2016 acquisition of Solar City means that it could also benefit from President Biden's green push. Tesla is also able to exploit the attention accorded to Elon Musk as free marketing for the company. The founder and CEO of NIO, William Li, is a relatively unknown figure to the layman and the common folks even in his home country. As we said earlier, NIO's battery as a service concept is one of its key key selling points. This allows the company to market its electric vehicles at a lower upfront cost and thereby improving affordability. An additional benefit of this arrangement is that NIO could eventually earn more from a customer over the lifespan of the car sold, as the full subscription fees collected exceeds what the company would have collected if it sold the battery up front. Also, while NIO records less revenue per car sold, it secures a steady recurring income from the battery subscription. Thinking of the potential of either Tesla or NIO becoming a 10-bagger investment, it appears that the latter has a greater likelihood. NIO has an enterprise value of around 1/10 that of Tesla presently. Therefore, for NIO to be a 10-bagger, it would be valued at $850 billion, roughly what Tesla is today. On the other hand, for Tesla to return tenfolds from today, it would mean an enterprise value of $8.3 trillion, a mind-boggling figure. To put this in perspective, Tesla would be worth around 3.6 times the current value of Apple, or around 5 times the current value of Amazon, both of which are the two largest corporate giants we have today. Analysts are projecting Tesla to achieve revenue of $315 billion for the fiscal year 2029. Incidentally, that would be 10 times the $31.5 billion of revenue that Tesla recorded for the year ending December 2020. If Tesla continues to trade at the same price-to-sales ratio by 2030 as today, Tesla stock would, of course, be worth 10 times more, at the $8.3 trillion mentioned earlier. Comparatively, the consensus revenue estimate for NIO is $42.4 billion for the fiscal year 2029. From an absolute number perspective, that figure seems more reachable. However, it's a whopping 17 times increase from the $2.47 billion NIO is expected to bring in for the year ending December 2020. NIO would see its year-on-year revenue growth slow from 123% in 2020 to a mere 18% by 2029. Another challenge that NIO is currently facing is that China had been offering electric vehicle credits, but the government has started to phase those incentives out. At the same time, China has opened its doors to other electric vehicle manufacturers as well, so there are plenty of other options for the Chinese people. Only the strongest of these companies are going to survive, and this may or may not include NIO. The company recently had a recall that included around 5,000 NIO SUVs. They were recalled because of the risk of battery fire. Even though these are problems for NIO, they have a lot of reasons to be hopeful. The Chinese market is very vast, and the demand for electric vehicles there is very strong. Electric vehicles could make up as much as almost half the cars on the road in China by 2025. Also, the cost of electric batteries is going down thanks to certain battery makers, and NIO has the backing of Tencent. On the other hand, Tesla is very popular, and the electric car manufacturer had its name on 1/3 of the electric vehicles sold in the United States last year. They are also working on their Cybertruck, and its vehicles can be charged from virtually any electrical outlet. However, Tesla has also had its share of complications, including batteries catching fire, and Elon Musk has been controversial as CEO. We should also consider that other competitors are trying to catch up. Porsche is hot on the heels of Tesla with its Taycan model that has proven extremely popular among car enthusiasts. Tesla has the clear edge over NIO in rolling out a profitable autonomous ride-hailing platform given its head start and favorable home market. Hence, it's also fair that Tesla commands a premium valuation over NIO. The consensus revenue and EPS forecasts meant that Tesla is trading at a forward price-to-sales ratio of 2.6 times and a forward price-to-earnings ratio of 33 times for the same period. The similar multiples for the two stocks, despite Tesla showing more promise and with a global brand cachet, suggest that Tesla remains undervalued relative to NIO, even after its superior share price performance in the past months. So we definitely believe that Tesla is a better buy right now. If you'd like to stay up to date with the best and latest content about stocks and entrepreneurship, then make sure to subscribe to our channel and leave a like on this video. Did you find this video valuable, or do you want to add anything? Make sure to let us know in the comment section down below. We are posting a new video every day with the most undervalued stocks in the market right now.